There we go.
Yeah, perfect. Thanks, Lauren. Yeah, and I think a good chunk of you guys, but like Lauren said, Continuum Ag is of course my main thing, but like Dad was saying, farm with him, and we had a really good year trying to figure out, how do we just really continue to optimize our input costs and continue to drive yield on our farm, and of course overall profitability with that. My Most of you guys know me, right, as the 45Z CI guy. I'll give a quick update on that because it's important on why am I also now talking R&D credits and talking R&D credits because there's not a whole lot to talk about with 45Z and CI. So I had to talk about something different. But 45Z, it is still moving forward. There does still look like there's going to be opportunity for farmers. It's just keeps getting punted down the road. So what's gone on here recently, or maybe the quick overview of 45Z. 45Z was originally introduced in 2022 with the Inflation Reduction Act. The rules were such that the Congress passed the bill in August of 2022. It's a bill designed to help decarbonize liquid biofuel. Think ethanol, sustainable aviation fuel, biodiesel, and part of decarbonizing the fuel is utilizing low carbon crop that's going into that fuel. And you can create a low carbon crop, low carbon corn and soybeans using cover crops, no-till, better fertilizer inputs, all these things a lot of us on here are doing anyway that we're preaching that, maybe some of the ag ventures and ag launch portfolio companies that can help optimize some of these things. So 45Z continues to be a huge opportunity. We're seeing an average tax credit value could be around $200 per acre, with the farmer getting a percentage of that. Maybe 25%, maybe 50%, maybe 10%, maybe 70%. I don't know yet. But what has happened and what we are waiting on here as of recent is that the farmer component of 45Z, the feedstock component, the USDA has been working on the rules. Our buddy Jimmy Emons is there at USDA, not directly involved in this to a small extent, but USDA has been updating the calculator as to how to decarbonize the corn and soybeans. That calculator is done and ready to hit publish. And actually, last week, some of the chatter in DC was we could be seeing that calculator being released before Christmas, meaning like today. However, late last week, there was some disgruntlement going on in DC amongst the different agencies because you got USDA involved, you got Department of Energy involved, you got the IRS involved, and they're not all in alignment with the game plan. So the USDA updates are delayed again. I'm trying to get as much insight on them as I can as to is this something that we should continue to hold our breath on? And is it actually going to come to fruition? It's been in law for more than 3 years and probably going to be, 3.5 years before we even get the details and get the rules, which is just mind blowing to me. But it is still moving forward. Now, one other piece on that. And then, so with that, it's just unfortunately we got to sit and wait a little bit on 45Z, but still holding on to hope, at least for another little while. The just 2 days ago, the IRS did submit a rule to the White House, the Office of Management, something like that. OMB is the acronym for the agency or whatever the group. But anyway, the IRS did put together rules for the ethanol plants for the 2025 year. And like I said, it's in review right now. It's just all of my sources are saying there's not a feedstock component or a climate smart ag component involved. That has to come in a future version. So anyway, so 45Z still holding on to hope that's going to happen, but obviously it is far delayed from what we were originally working on. So with that, we've been looking at Continuum Ag. What are other ways that we can bring value to farmers, right? 40, I never started Continuum Ag to be a 45Z company. I never started it to be a CI company or to work on tax credits or low carbon biofuel. I started Continuum Ag to help improve family farm profitability via improving their soil health and helping farmers get paid for improving their soil health. 45Z is a big opportunity for it. We also work with a company called Steward Link that does your cost share applications and stuff if you want help with equip and CSP contracts and kind of government paperwork. And especially now as the $700 million Regen Ag pilot project gets rolled up, I think Steward Link and the monies there could be good for a lot of us on this call. Um, but one of the other opportunities that we've been looking at is R&D credits. R&D tax credits. I've got a couple resources here that I can show you guys. Um, Basically, the concept of R&D credits is it's just an accounting concept. It's not specific to ag. It's not anything new. What's different here recently and why we're talking about it recently is within the Big Beautiful Bill, past July 4th of this year, the Big Beautiful Bill changed the R&D credit a little bit so that when you categorize some of your expenses as R&D, you can also take those expenses and deduct them from your taxes also in that same calendar year. Before the Big Beautiful Bill, you had to take those R&D expenses and amortize or realize them over a 5-year period. And so by spreading out those expenses over 5 years, you weren't able to take all those expenses on your taxes in that calendar year. And therefore, if you had, you could realize a higher tax liability because you took some of your expenses and spread them out over 5 years versus deducting them from your taxable income in that given calendar year. So Big Beautiful Bill fixed that. So again, basic concept is on our farms, in your business, in anything, right? It's again not specific to ag, but the concept being you're spending money on your business. Some of those monies can be categorized as research and development. They are new to you farming activities, new technology, new efforts that would qualify as experimental. And simply, it's rather than categorizing them as a normal business expense, you're categorizing them as R&D. You still deduct them from your taxes in that given year. However, the R&D credit steps in to give a federal tax credit that averages about 7% of your qualifying expenses. And in the state of Iowa, we also have a 6% state tax credit as well. Different states are all a little bit different. Most of the ag states qualify. Lucas, sorry, I don't know about Pennsylvania off the top of my head, but my guys could answer that, or for any of you guys that are outside of Iowa. But what so it's just categorizing some of your expenses differently. The caveat on this whole thing is because it's a percentage of a percentage, so it's a percentage of your total expenses are R&D, and of those expenses, you get 7% back federally and about 6% back on the state. So by the time you take a percentage of a percentage, the money coming to you, you got to determine is there enough there to be worth it? And by that, I mean the CPA firm that we work with, which is called UHY. They're one of the biggest CPA firms in the country. They've got offices in Ames, Des Moines, but most of the people that we work with are down in Texas that work on the R&D stuff. They work off of a percentage of the credit, and they do have kind of a minimum as well. So the caveat on this whole thing is if you've got large enough qualifying expenses, it's an absolute home run. If your qualifying expenses are too small, it may not be worth it for you, and the CPA firm may not do it either. But it's at least worth a conversation. It's your taxpayer dollars. You might as well not pay to the government. they're screwing up what we are paying to them, so we don't need to pay them any more than what we have to. And you might as well get rewarded for your innovative efforts. So let me show you real quick what I suggest that we do, and then hopefully clears up any potential question, or, maybe some of your initial questions. We go from there. So where I suggest you start is if you go to the continuum.ag website, I'll put it in the chat, but just my basic website, we literally have this pop-up calculator that pops up. You can't miss it. And this is where you can download the free R&D calculator that I'll show you so you can run some quick numbers and figure out what your potential would be. So Continuum.ag, you can go right there. I do also have more videos, a lot of resources and stuff right here, lots of material. This is blocking my button I want to click. Zoom, get out of my way. There we go. Okay, this is the actual link that I will send you guys to get connected with UHY. Usually we are only connecting, our farmers that are enrolled in, our services, but happy to connect all you guys, whether you are, a current customer or not. It's a simple form that just outlines some basics of your farming operation. The process in all this is that we've got this form that pings one of my guys in the office, and we send you an email to connect you with the CPA firm. They have an exploratory call that's 20 minutes or so, 20, 30 minutes, just to kind of talk about your operation, and they help you to work through your own numbers about what expenses would qualify, what would not qualify, yada yada. That's free. In this entire R&D program, the only time you would ever pay anything is when you file your taxes. If you are utilizing these R&D credits and actually able to make some money off of it, that's then when you pay UHY based on a percentage of the R&D credits that you've generated. So I really view it as super low risk. Sure, it's some work uh, to dig through what credits are going to qualify and whatnot. But, coming up here soon, you got to be doing organizing all your numbers for your CPA and for filing your taxes anyway. This CPA firm does not replace your local person that you've been working with. Okay. These guys simply would step in to do what's called the R&D study. So they help you put together the R&D tax credits. They put together the paperwork. They put together the documentation. They stand behind you if you were to get audited, but you take that report and give it to your CPA firm, and they fill out a form that gets submitted. Dad may know what it is. He's been going through this right now on his farm taxes because his farm doesn't work off of January 1 to December 31. So he's been kind of in an expedited system here. One other deal on this and why I think it's important for everyone here to look at is because of the big beautiful bill, you can actually look back the previous 3 years and garner these R&D credits looking back. So not just for your 2025 expenses, but you can look back to 2022 and go and get your past R&D credits. Now, oops. Um, Now with that, there may be a need to refile your old taxes. So it's not a slam dunk for everyone. On our farm, we're not going to look back the 3 years, but dad is going to be able to utilize these credits in this, on this year. But really, a lot of this is I'll send out this link, hit the get connected button, and we'll connect you with these guys. So now this calculator, Lauren, I'm assuming you guys are seeing my screen as I pop through the different tabs and stuff, right?
Yes, looking very good.
Okay, so I showed at the beginning, right? Here's this get my free calculator thing, whatever. Um, that this is a good spot to start where you can kind of calculate what this would look like for your operation. So let's say, this is the calculator that is free. We developed it. It's just super, super basic that you can figure out, um, is this going to be something that you should spend any time on? Okay. So say you've got, so this is, corn acres. Say you've got 500 acres of corn this year. Say you did 225. Um, Say you're going to sell that corn for hopefully 450, but I kind of doubt it. Let's say 420 a bushel, and then soybeans. Let's say we got 500 acres of beans as well. We got let's say like 68 bushel on that. Let's just call it 11 bucks even. And then we boiled the qualifying expenses down here to try to keep it simple, but let's just say we've got yeah, 80% is fine, and let's just say we've got 15% of our total expenses that qualify as R&D, tax rate at 24%. You can dial that in, but this calculates in, you're looking at total revenue on your operation about 850,000. The of those of the 840,000, you're so that on corn or whatever, what that's about 950 bucks per acre in income, right? If we look at 225 times $4.20, $945 per acre in total income. And if we've got 15% of that as qualifying R&D expenses, that'd be $141 per acre of your expenses that would qualify. So $141 an acre that would qualify is $100,000 total of R&D expenses. And then when that gets boiled down, the total credit ended up being about $7.11 per acre. So we spent because this was looking at corn and soybeans, right? So it's a little bit rounded and stuff here, but of our total qualifying expenses, it ends up being, kind of a percentage of it. The types of practices that can qualify are new to you hybrids or varieties. That's a big one. We've been able to do a lot of that on our farm. So it doesn't have to be a brand new, you're the only person in the world that's using this hybrid. But if it's a hybrid or a variety that's new to you, that's experimental, that can qualify. And the expense of the seed, the expense of planting the seed, the expense of harvesting and doing yield evaluations, all of those expenses can qualify as that experiment and can qualify as research and development. So that's a big one, right? If you can get some money back for buying expensive, new to you seed, it could be a big deal. Other things that can qualify is if you're experimenting with a biological, if you're experimenting with new cover crop practices, other new technology, those type of expenses, and the variable expenses associated with that test, it can all qualify. Some of the things that don't qualify are um, your depreciable assets, right? So you may be doing something experimental with strip till, but if you are depreciating your strip till rig, you can't also claim R&D credits on the expenses associated with your strip till rig. Like on ours, our planter, right? We've got our planter all dialed up for the trials that we do. The seed, that's experimental seed, a variable cost. The cost for the biological product or starter or whatever, that's a variable cost that can qualify. But the planter and the tractor that's pulling it, since those are being depreciated, you can't also stack getting the R&D credit. If you, though, are having your farm where it's experimental seed, but you're paying somebody else to plant your crop, you're paying somebody else. Now it's a variable expense because you're having your crop custom planted. That's a variable expense to you. That would qualify. If you were paying somebody to custom spray or custom harvest or custom, because that, again, it's not depreciable, that those type of expenses can qualify. So, um, again, it's just taxes. It's just how you are categorizing some of your expenses that can qualify. Um, I don't even, I'm sure Bob back in Bob's old alma mater of John Deere. I'm sure their R&D category was absolutely massive, and I can guarantee they were taking advantage of this. We've been utilizing these credits at Continuum Ag for years as we have done our on-farm trials and spent crazy money building software and stuff. Those kind of expenses have qualified. Um, I just didn't know that they were applicable to farmers until this summer with Big Beautiful Bill, and it's again, it's just tax code. It's at least worth taking a look at and pretty low risk for some potential return. Now, $7 an acre, like I showed in my example, is a little bit low. On average, we've shown a return of about $11 per acre per year. And again, there's an opportunity here to look back 3 years. You may be able to get around $40 or so would be kind of what we're seeing on some of our guys, $40 per acre, all wrapped up in this year. So it's definitely not nothing. And again, it's just categorizing expenses, utilizing tax code to our advantage. So low risk. You've got to have you got to be able to just show and prove that like you were experimenting with it, you were trialing, but it's been a relatively smooth enough sailing process that again I think it's worth it. So I don't know, Lauren, does that make any sense? Hopefully,
Yeah.
kind of
Oh, yeah. Like I
what you were
said,
looking at.
guys have questions, feel free to unmute yourself. If we need to shut off the recording, let me know. We'll shut it off so
Mm.
we can ask one-on-one questions. While we're waiting for others to ask questions, I'll remind people that we got quite a few new faces on here. If you're interested in hearing more of this stuff, always get a hold of me. We'll get you signed up on the Fin Network at minimum. That's the free entree. That way you get the emails and all that stuff. But like the YouTube recording that I mentioned, if you want to do that to Ag Venture Alliance, we usually post a good portion of the recordings here. So just get on that YouTube page or message me and I'll get you the link. I was going to try to put it in here, but it's kind of hard to run the meeting and add the links at the same time. I'm not that talented on a computer anymore. So any other questions? There, Mitchell,
I don't know if we still
put
have
the Ag link in the chat.
yeah, I'm tossing a couple of the links here. Dad, are you on and available? I don't know if you wanted to if I missed anything on kind of your experience and what we've seen so far.
You
No,
want to go?
I really don't have anything to add to what you just been talking about.
Yeah,
Mitch,
go ahead, Bob.
uh, I you talked about a percentage of a percentage. Is there a rule of thumb on what percent of the expenses can be qualified as R&D for an operation?
No, no, because everyone's going to be super different, right? So, like on our farm this year, we had almost all of the corn hybrids that we used were new to us this year. Like it just by happenstance worked out that way. But no, it's going to be very different for every operation, and that's really where all of this boils down to. Get connected with either the CPA firm that I can connect you with, or ask your CPA about it. Maybe they've got a recommendation. I don't really care. Obviously, we are happy to help you out. Um, it just takes having a conversation to figure out what qualifies. Is it going to be worth it? But like I said, the average though, Bob, of we've connected dozens and dozens of farmers so far, and the average return, even after UHY takes their cut, the average payment back to the farmers looking at about $11 an acre per
Okay,
year.
thank you.
One piece on that, Mitchell, to Bob's question, the one limit that we did work up against is you got to be a little careful with is when you're charging labor back. If you're accounting for a variety of labor and a lot of farms, we don't pay ourselves very much. We tend to underpay ourselves in certain business structures, especially. But whatever your reported W-2 wages are, you've got to be at a reasonable percentage of that. So on a labor cost, you're not going to be able to charge, maybe full amount of what the time is that you spent on that project, just because you're not paying W-2 wages on that. So that is one area you have to be a little careful with.
Yeah. So what Dad's getting at there, right, is a lot of times as farmers, we're not necessarily paying ourselves some big salary, right? Where if you were, or if you had a hired person that you were paying a salary, And say of that person's time, 50% of their time is working on R&D projects. Well, if they're getting paid a, $75,000 a year salary, 50% of that salary you can categorize as R&D because 50% of their time is associated to that. That's how we do it at Continuum as well. So some of like Carolyn from my team, right? A portion of her time is associated to just our normal business endeavors, but a portion of her time she's working on, helping with software development and other research efforts. So a portion of her salary we can categorize as R&D, associated. But yeah, like Dad was getting at, the problem was you can only categorize so much of your time and your labor as you have actually paid yourself, as you have actually, paid yourself a salary. If you're in your company, if your farm is set up where it's all passed through to you, that would be a little bit different, right? Versus on Dad's operation where it's a corp that it's paying its own taxes and his W-2 is minimal, right? Obviously for tax purposes too. So that's just one of the kind of catches with this that your time, the labor associated can qualify, or at least a portion of it, but you can only qualify up to how much you've actually paid yourself. You can't just use Iowa State custom rates for those variable expenses if you don't have the cash, uh, that you're reporting that matches up.
Any other questions? One I had fill in here, if our data is in your topsoil program and that, is that all? I know at one point you mentioned that would be a natural transfer. Is that still?
Yeah. So part of it is the issue is that, in topsoil today, we're not collecting financial info. So the financial info is really what's important. What UHY asks for is, especially if you have filed a Schedule F, if you've done a Schedule F in the past or using a Schedule F, that is really what they would like to see. Since Continuum is not necessarily collecting financial info, only a small percentage of our stuff can really help you. Where we fit in and where we can help you is that if you do end up getting audited and you've got to be able to show some additional proof that no, you did actually you actually did experiment with cover crops, or you actually did change some of your fertilizer stuff, or you actually did have like yield data that you were looking at. Obviously, we're helping you collect that stuff. That's where they can really step in and help to avoid any headache if you get audited. Now, chances of that are obviously low, and especially as Trump is continuing to cut back on the IRS agents that would be the ones auditing you. So that risk is low, but it is still, as we're helping you collect your agronomic data for 45Z and other purposes, you're in a better position to be prepared if you do get audited. Lucas, you got one?
What proof do you gotta prove that you're doing the R&D? Like, what's
You
the
just need
proof?
like receipts and stuff.
But
So,
like yield monitor data or like a just proof
yeah.
that it's labeled R&D on my QuickBooks spreadsheet.
Yeah. It's just how you're doing it in QuickBooks. It's just categorizing stuff that's different. Dad can speak into this, but like we put together a little spread, Dad put together a little spreadsheet of here's this new hybrid, here's how much it cost, here's how many acres we did it on, and then like here's some notes about it, right? So here's some notes about what we observed. Do we like this hybrid? Do we not? Think of it as like if you were, an R&D or a research scientist at a company, right? You're going into a research effort with variable A versus variable B. You may have a hypothesis of what you think will happen, or you have some expected outcomes, and you're just documenting that, experiment. It's it's kind of hodgepodge is the answer to that, especially on the farm, right? But um, being able to prove something one way or the other, it hasn't been that big of a hurdle so far.
Oh, there's a lot of things going through my brain. One thing this year, we grow Plenish soybeans in Pennsylvania.
Yeah.
Pioneer just come out with some Enlist Plenish, and I'm getting a chunk of them just so they have control over where they're going. So, I mean,
Yep.
that would qualify.
Absolutely. Yeah. So the expense of the seed would qualify. The expense of the Enlist herbicide that needs to go on it. The expense of the labor to spray the Enlist herbicide.
But what if it's all
Not
right, labor, but not equipment if I'm using my own sprayer?
you got it. And labor only if you are actually paying yourself or paying a hired guy to do it. So you got to be able to match up that like you actually
Yeah.
paid for the labor.
I am on my salary, but I'm a
Yeah.
low paid salary
Yeah.
payroll.
Yeah, that's right.
I understand
So
what your dad was saying. We can't overextend our if we're only paying ourselves $1 an hour, that's all we can equate for. So
that's right. So but at least like a portion of that. So say you're paying yourself, 20,000 bucks a year, right?
yeah,
Because to show something. And then maybe you can qualify 80% of that was tied to some of these R&D expenses. Well, you can take 80% of that 20K and at least get something off of it. But
In that
but also
same breath,
for the plenish stuff, it'll also be, the harvesting of that seed that counts as well. The labor and the technology and like the data analysis that you've got to do at the end to do the yield comparison, all that would qualify. Or if you have a crop scout that you're paying that's going to scout the crop, and you're paying them a variable per acre fee to scout or hourly, that would qualify. So lots of different stuff.
I'm gonna go
Lauren
ahead.
was asking a question.
I'm gonna go ahead and shut off the recording here.
Joe, you got one?